All right, so we've got some interesting information here from Diversified Insurance Brokers.
Yeah.
It's all about the Revol One Direct Growth Multi-Year Guarantee Annuity.
Mm-hmm.
And, obviously we want to try to help break down
Right.
what all this stuff means for anyone planning for retirement.
Absolutely.
So yeah, it looks like we've got guaranteed growth, principal protection,
Yep.
and a few different what they call optional features.
Uh-huh.
All of that's coming from Revol One Insurance Company.
That's right.
So why don't we just jump right in and see if we can highlight
Yeah.
some of the most important stuff here.
Sounds good.
So direct growth, what is that exactly?
Well, basically, it's a fixed annuity,
Okay.
which means that
Okay.
you're going to get a guaranteed interest rate
All right.
for a specific period of time,
Yeah, right.
and you get to choose that period,
Got it.
whether it's 3 years, 5, 7, or 10 years.
So no matter what's happening out there in the market,
Exactly.
my money's still going to be growing.
That's the idea. You got that guaranteed growth. Now,
Okay.
importantly, it grows tax deferred.
Right.
You don't have to worry about paying taxes on those earnings.
Until I take it out.
Exactly, until you actually withdraw the money.
Okay.
And that can really make a huge difference, especially over the long term.
Yeah, that compounding.
Yeah, the beauty of compounding really amplifies your returns over time.
And I think a lot of people don't, they don't realize how much of a difference that can make.
Absolutely.
It's a huge factor.
So at the end of, let's say I choose that 5-year period or whatever,
Right.
what happens then?
Well, you've got options. You can renew it for another term,
Okay,
or you can switch over to like a daily interest option.
got it.
And the good news is you won't get hit with any surrender charges.
Okay, that makes sense.
So it gives you some flexibility there.
Yeah, all right, that makes sense.
And remember, this tax deferral can be especially helpful if you think you'll be in a lower tax bracket when you retire.
Interesting. Okay, so
let's say the market really takes a downturn. What happens to my initial investment?
that's where the principal protection comes in.
Okay.
It basically means that no matter what happens in the market,
Okay.
your original contributions and any interest that you've earned are safe.
So I don't have to worry about losing money if the market tanks.
Not at all. It's completely protected from those market fluctuations.
That's a big deal for a lot of people.
It is, especially as you get closer to retirement.
Yeah, you don't want to be taking on a ton of risk at that point.
Exactly. You want that peace of mind.
All right, so we've talked about protecting our money while we're alive.
Right.
But what about what happens to the annuity if something happens to me?
Yeah, so that's where the death benefit comes into play.
Okay.
And there's a base death benefit, which is basically the greater of either your cash surrender value or a guaranteed minimum.
Okay.
But there's also an optional rider called the Enhanced Death Benefit Rider,
Enhanced. Okay.
and that's where things get really interesting.
All right, I'm listening.
So with this rider, your beneficiaries are going to receive the full accumulated value.
The full amount. Wow.
Yes, the full amount, regardless of any surrender charges or market adjustments.
That's a huge difference.
It is, and it can provide a lot of reassurance for your loved ones.
And that includes any potential market value adjustments, too.
That's right. It covers everything.
Wow.
And often this rider will also have provisions that waive certain charges or MVAs
Okay.
in specific situations, like if you need to go into a nursing home or if you have a terminal illness.
So it's like extra protection on top of the death benefit.
Exactly. It adds another layer of security.
Okay, so what if I need to access some of the money before I pass away?
Yeah, so the direct growth does offer some access to your funds.
Okay, good.
There's an optional rider
Okay.
that allows you to take free partial withdrawals every year,
Right.
and you can withdraw up to the greater of either your accumulated interest
All right.
or your required minimum distribution, which is the RMD.
Got it. So there's some flexibility there.
Absolutely. It gives you some options for accessing your money if you need it.
What about like if I had a major medical expense or something and needed to take out a larger amount?
Well, if you withdraw more than that free amount and you're still within the surrender charge period,
Which could be up to 10 years, right?
exactly, depending on the term you choose,
Got it.
then you're likely going to have to pay some fees.
Okay, that's fair.
And there's also something called a market value adjustment, or MVA, that might apply.
An MVA, what's that?
It's basically an adjustment that the insurance company might make
Okay.
to reflect the current market conditions.
Okay.
So, for example, if interest rates have gone up since you bought the annuity and you decide to withdraw early,
Yeah.
they might adjust the value down a bit.
To match the higher rates.
Exactly, to reflect those current market rates.
Okay. And on the flip side,
On the other hand, if rates have gone down, they might adjust the value up.
Interesting. Okay, so it could go either way.
It can, But the important thing to remember is that your cash surrender value will never fall below a guaranteed minimum.
Okay, so there's still a safety net there.
Absolutely. There's always that baseline protection.
That's good to know. All right, so who is this product really designed for?
Well, it's available to individuals between the ages of 18 and 90.
Wow, so pretty much anyone.
Yeah, a pretty wide range. And the initial premiums typically fall somewhere between $25,000 and $1 million.
Okay, so there's some flexibility there depending on your situation.
Exactly. And it also offers what's called annuitization options.
Annuitization options, what are those?
That means you can choose to convert your accumulated balance into a stream of income, either for life or for a specific period of time.
Got it, like a regular paycheck.
Exactly. And that income stream has to start by the time you reach age 100.
Okay, makes sense. All right, so last question, what about Revol One Insurance Company itself?
Well, they've been around for a while. They were founded back in 1980.
Okay.
And they currently have a B++ good rating from AM Best, which is a pretty reputable rating agency.
So that means they're in good financial shape.
Exactly. They've got a stable outlook, which means they're likely to be able to meet their financial obligations going forward.
Which is obviously really important when you're talking about an annuity.
Absolutely. You want to make sure the company behind it is solid.
Yeah, you're trusting them with your future.
Exactly.
All right, so just to kind of wrap things up.
Yeah.
It sounds like this product is all about, providing that guaranteed growth over a certain period of time, protecting your principal from any market downturns, and giving you some different ways to access your money and provide for your beneficiaries.
That's right.
And then those optional riders add another layer of flexibility and customization.
They do. It allows you to tailor the product to your specific needs.
All right, so this has been really helpful.
Glad to hear it.
For anyone listening, I think the big question to ask yourself is, how could this guaranteed growth strategy fit into your overall financial plan, especially considering your own retirement timeline?
Absolutely.
And how comfortable you are with risk. And also think about what it really means to have your principal protected.
Yeah.
What kind of peace of mind does that give you as you're planning for the future?
Right.
And then, those optional riders are really interesting too.
Definitely.
Especially if you're concerned about potential healthcare costs down the road.
They can make a big difference.
So yeah, a lot to think about.
There is.
Hopefully this deep dive has been helpful for everyone.
Absolutely.
Thanks for listening.
Thanks.